If you think you're having a bad week, imagine how Jeff Bezos feels knowing that he lost $18 billion from the time that he reported earnings yesterday until today. And Amazon being down just 10% has had that impact on his personal net worth. But that dramatic fall is very similar to other companies like Apple and Netflix, who last week saw a 30% drop in their share price. As a result of the declining prices of these tech stocks, the Nasdaq Index is down over 13% at the time of this recording. And Nasdaq is where many investors have gone for growth. But the other indexes like the S&P 500 and the Dow are also down between with the S&P 500 down about 6% and the Dow down about 4% in April alone. But many investors are invested not just in equities, but they also have investments in bonds, which are perceived as being less risky. But the reality is that bonds have also fallen, and depending on the government bond or the bond index that you're in, including government bonds, those have had a drop as well. Government bonds are down about 2% as of this recording. So where do investors go in order to preserve their assets? Well, many investors have gone into gold thinking that that's a hedge against inflation and it gives them less volatility or less variance in the price. But gold is also down about 2%. And if we look at a bigger basket of commodities, you see that oil is down about 1% as well, even though we have seen a change in demand as a result of what's going on with the war in Ukraine. So it's not just stocks, bonds, commodities. You're also seeing currencies like Bitcoin that are down in a major way. Bitcoin's down almost 19% as of this recording, just over the month of April. And so if you've been invested only in Bitcoin, you're down about 19%. But one of the assets that's appreciated over the past month has actually been the Japanese yen. The dollar has strengthened against the yen, causing about a 5% appreciation as of this recording. And so many investors are looking at their portfolio and they're wondering, where do I go in order to hedge the risk? I have to worry about inflation impacting my portfolio at the same time that the market is repricing the risk because of rising interest rates. So how do I get to a position where I can live with the amount of risk in my portfolio, and most importantly, at least keep the same purchasing power going forward as we deal with inflation? And so the best answer for investors is to have a diversified portfolio that is based on their risk tolerance. I know that that's very basic, but the fundamentals are what help you to weather the storm. And the reality is that having a basket of different investments that have a little bit of commodities, a little bit of bonds, fixed income, and then having some securities is going to give you a less exposure to any individual asset class, and you're going to offset some of the more dramatic falls like we've seen in Nasdaq. The reality is going forward that growth stocks are going to be repriced as a result of rising interest rates, and that's going to have an impact on all risk assets. So if you want to position yourself going forward, you have to be aware of what your exposure is to each asset class and also what your risk tolerance is for investing in general. That's going to be based on how soon you need the money. And if you are retiring in the next 6 months, you're going to have a different risk exposure or a risk tolerance than somebody who is just getting started in investing. If you'd like help, my name is Nathan Garcia, and I'd be happy to help you out. You can reach me on Pocket Plan. Thanks so much.